Hey fam, welcome back to DivyFX, where we make forex finally make sense. So today we are going to be talking about something very important in trading, and that is called your market structure. Your market structure. Okay, now he's right here. If you ever watched trading videos and heard things like higher highs, lower lows, or break of structure, once you have had stuff like that, higher highs, lower lows, and break of structure, and you are just there wondering what exactly that means, don't worry, because today we are going to be touching all of that. So in this video I'm going to be breaking it down the simplest way possible so you can start reading the market like a trader, because honestly, if you don't understand market structure, trading will always feel confusing to you. Take it from me. But once it clicks, this chart starts to make a lot more sense to you. So let's get into it. What market structure actually means. Now, market structure is simply how price moves on the chart. Let's start with the basics. When price moves up here like this and then turns back down like this, this very point you're looking at right here, this point now is called your what? It's called your high or your peak point. I'm going to take it again. When price moves up from here to here and then turns back down, that point here is called your high. I'm going to be typing it. It's called your high. This very point is called your high. Is that clear? That point is called your high. But now when price moves down and then bounces back up, something like this, this very point here is called your low. I'm going to write it here for good visuals. It's called your low. So when you look at a chart, you will notice that price is basically creating these highs and creating these lows. You can call this your peak, you can call this your valley. Now those peaks is what you call the high, as I said. Now those valleys are what you call your lows, those deep down stuff. Now, and when those highs and lows are formed, they actually tell us the direction of the market. They tell us the direction of the market. In trading, the market is always in one of these three conditions, and I'm going to be talking about those ones. And there are, first one is your uptrend. An uptrend. What's an uptrend? An uptrend happens when the market keeps making higher highs and higher lows, something like this. This is a high, right? This is a low, like I explained, right? And then it makes a new high, another low, this. Now this right here is an uptrend. This right here is your uptrend. Now how can you identify this? It's giving you highs here. This is your high, right? This is your low. This is your low. Now the next one is going to give you a higher high. I'm going to denote that by typing HH. That is to represent your higher high. You can still call it your high. And then the next one we have here is your higher low. That is your HL, higher low. Now when you see something like this on the chart, basically means that the market is doing what? Is giving you an uptrend. This is an uptrend because it is moving in an upward direction, something like this. Another good way to picture this is like talking about walking up a staircase. When you're walking up a staircase, you have like you step up like this, you pull back a bit, step up again, another pull back, step up. You just keep going high and high. Now this is how to denote your uptrend. It just keeps moving up and up. So the structure looks like this, like I explained: the high, the low, the higher high, the higher low, and another one. It just keeps moving like that. A higher low again, a higher high. Just follow me on this: a higher low, a higher high. Now, okay, this is basically where we stop at it. So if you keep denoting this as H, that is your higher high. Another one right here is going to be your higher low, and then just keep going forward. Now this is called your uptrend. Now when you see this happening consistently, the market is basically in an uptrend. The market is basically in an uptrend. Now the next one we have right here is called your downtrend. It's another market condition we have. It's called your what? A downtrend. Now the downtrend is basically the opposite of what I explained earlier. This is when the market keeps making lower lows and lower highs. So instead of climbing stairs, price is basically walking down the stairs, something like this. This is a low, right? This is a high, right? The peak. Now instead of moving up like this, it now breaks lower than the low, the initial low we have, and then it comes up again, it goes down again, up, down, just like walking down a staircase. You understand? So I'm going to be showing, we're going to be denoting this is a low, right? This right here is called your low. This right here is your low, and then this right here is going to be my high. Okay, something like this. But now, to denote that it is in a downtrend, instead of having higher highs and higher lows as we had here, you know, this is your high, this is your low, then we have a higher high and higher lows. It's now the opposite right here. When it comes to downtrend, we have low, we have high right here. Now the next one we're going to have is a lower high. A lower high. Now this is, sorry, a lower low rather, because this is your low. Now if this low comes down, we have a lower low. We're going to denote it by LL. Call it your lower low. This is a lower low. Now this is your high also, right? But now this high is lower than the previous high, so we call this new high your what? Your lower high, LH. And it just goes on and on. The next low becomes a lower low again, right? And then the next high you have here still becomes what? Your lower high. Your lower high. Just follow me on this. So we're going to name all of these peaks and the valleys. So the next value we have here is also called your what? Your lower low. That's your new low. Call it your what? Your lower low. Something like this. Then the next high we have going to become our lower high, because the high, instead of making new highs or a high that is higher than this very last high, the high just comes down. That shows that it is in a downtrend. Now when you see something like this on the market or on your chart or on your screen, just know that the market is bearish. Now the third market condition I am going to be talking about is called the sideways market, or your ranging, or you also call it consolidation. Your ranging market, your ranging, or you can call it your consolidation, or some people call it sideways, because the market is neither moving up, neither moving down. It's just moving sideways. Sideways, something like this. When it's not moving up, it's just making a move like this: up, down, up, down, up, down, up, down. Now this very market right there is what you call your ranging market. Why is it called the ranging market? It is because the market is not giving you a clear up move. Maybe it's not actually telling you that it wants to move up or whether it wants to move down. It's just within this very range, within this very price range. Now you call it your what? Your ranging market, or your consolidation. Is always inside a box. If you use a rectangle too and map it out, you see that okay, this very market is within this box. It's not making any clean moves to leave the box. You understand? Okay. Now that's for the sideways market or your consolidation market. Now during this period, price is not trending strongly up or down. It's just making moves like this. And for many traders, this is usually a time to be more patient, you know, and wait for a clearer structure. Now let's move into the next thing that we have for today, and that is your break or structure. Your what? Your break of structure. You can also call this your BOS. If you don't call it your break of structure, you can call it your what? Your BOS. BOS simply means the same thing in case you see it somewhere else. Now a break of structure happens when the market violates the current pattern of highs and lows. I'm going to take it again. A break of structure happens when the market violates the current pattern of highs and lows. Now, for example, if the market had been making higher highs, something like this, assuming that it's an uptrend, something like this, something like this. Now, the break of structure is basically something around here. Now, this is your break. This is where it broke up to make a new what? A new high. Now, mind you that here is your high, right? As you said earlier, that this is our high, and this valley that we have right here is our low. Is our low. Now, when the market moves up, this is our high, right? HH. Let's call it HH. Now, when the market moves down to this new higher low, that is your HL. Let's call it your HL. And then it breaks up to this very higher high right here. It means that the market is breaking structures, because this is the structure right here. From here to here is a structure, and the market broke this very structure. This gives us a what? Your break of structure. This is a what? A break of structure. Now that's basically what we mean by when we say that the market is breaking structure. Now it means that the market is violating the very pattern of the current pattern of the market, because assuming that we are going to be moving up, down, the market is supposed to at least keep moving down and down and down, but then it comes up and breaks this high. It has broken structure. So that's basically what it means. Now, if price also suddenly breaks from this very last place we have, this last high that we have right here, if this price suddenly breaks down to this very low, now if it breaks this very low that we have here, mind you that this is a low, this is your higher low, a higher low rather, this is a higher low rather. Let me finish identifying all of them. Your higher high, another higher high, now if the market moves from here and then breaks this previous low, that's a sign that the structure might be changing. Now some people call this change of character. Some people call this very move right here change of character. That is, I'm going to denote it as CHOCH. That is change of character. Some people call this change of character. Some people also call it BOS. At the same time, me, I can choose to call it BOS at the same time, because it's basically structures that keeps breaking, that keeps changing. Now, when something like this happens, when this very stuff happen, it sometimes can be the clue that the market might start trending in the opposite direction. That maybe these buys that we are, mind you, we are having buys because this is an uptrend, right? Now, when this very change of character happened, or break of structure happened, as I said, it's also called break of structure. When this thing happens, it means that the market might start to move in the opposite direction. You understand that? That means the time for the buys have probably come to an end, and then we might start having what? Sells, to just keep selling down, selling, something like that. So that's basically what break of structure means. Now, why does break of structure, market structure matters? Here's why it's so important. When you understand market structure, you can start to identify the trend, just the way I identify this trend and say that okay, this is an uptrend, or the one we had below, this is your downtrend. It helps you to know what the market is doing. Market structure helps you to know when the market is an uptrend or in a downtrend. It also helps you to avoid trading against the market. It helps you to avoid trading against the market, and also it helps you to time your entries much better. As time goes on, I'm going to be diving deeper into all of this. Honestly, a lot of my best trades simply come from understanding what the structure of the market is basically doing. Mind you, it's not complicated, it's just like learning to read price movements. Now, if you're serious about improving, here is what I want you to do. Open your chart like I have right now. This is my GBP/USD chart on 4 hours time frame. This is your time frame. See where my pointer is. This is how to know where your time frame is. Right here, your time frame, you have your 1 minute, 5 minutes, 15 minutes, 1 hour, 4 hours, 1 day, weekly. We have months as well. So to interchange, you can just move from your 4 hour to daily. The chart changes. So I'm going to be working on my 4 hour to show us what I want to show us. Now open your chart, pick a pair like GPHSD that I am on now. Then what I want to start doing is start identifying where the highs of this very chart are. Now from what I mentioned earlier, this right here is a high because it's a peak. So we call this what? A high. Call this a high, right? Now where is your low? If you are attentive, you see that this is a low because this is your valley. This is your valley of this very move. So I'm going to be identifying it, calling it your low. So this is our low right here. So where is the next high we have? So this is another high. It's another peak. Once you see any peak, that becomes your high. You just try to identify all of them. This is a high. This is a high. This is a high right here. And then just keep going up. Just keep doing that. Another high we have right now, right here. This is another high. This is your low. This is another low. This right here is a low. This is your valley. Once you see valleys, you call it your low. Once you see peak, you call it what? Your high. Now just do something like this. Identify the highs and the lows. This is another high. The very big high. A very nice peak. Very nice peak. So I'm going to be identifying this also. So that is basically it. Now since we have identified where the highs are and where the lows are, this is basically how to identify the market structures and know, okay, this is my high, this is my low, this is my high, my low, my high, this is the low right here. If you are following me, this is another high, this is the low. Just keep marking it on your chart. Don't worry about placing trades here. Just train your eyes to recognize where the highs and the lows of the market is. Over time, look at your charts and immediately know what the market is doing. Maybe if the market is an uptrend. So I'm going to take us to an uptrend on this very chart. To identify an uptrend, this is a very clean uptrend I have right now. Okay, so let's identify the trends on this very chart we have right now. So moving with the chart with my arrow to, this is your high, this is my low, this is my high, a new higher high, this is a higher low, a higher high here, a higher low, a higher high, a higher low, a lower high rather, move up again, a new higher high. Now this right here shows us that the market is doing what? Is moving in an uptrend. The market is bullish. Now this very movement that happened here, now this very movement that happened right here is called your uptrend. Why? Because we are having what? We had a high, we had high here, we had low here, right? This is our low. Now the next thing we have is your what? Our higher high, which we denote as our HH. Now this is the higher high, right? Where's the lower low? We have down here, right? A higher low. Oh, sorry about that. Okay, this is our higher low, right? Then the next thing we have is a new high. That is your high HH again, and just keep doing that. Identify all your structures properly. A higher low, HL. Now this is going to help you to know when the market is moving up. Once you do something like this, you know, okay, this market is buying. That means you are going to start looking for buy opportunities on this very market. Now let us identify a bearish trend or a downtrend on this very chart. Now look at this right here. Have a clean breakout structures to the downside or the downtrend. Look at this. Follow this line, this chart line. The market moved down from here, moved up a high, a lower low, a high again, another lower low, a lower high, lower low. This is a higher high. Let's just take it because the high was previous. This high right here was higher than the last high, so you just call it a higher high, and then it's moved down again. Now this right here is what you call your downtrend. If you look at this very closely, you see that the market was basically pushing down. Look at it. It was basically pushing down. This is my trend line. So it was following this trend, saying that okay, it's giving us lows. So this is the high, this is your peak, this is your high, this is your high, right? Now this is our low right here. Now the next thing we had here was a high, but this high was what? A lower high. So we call it as what? LH, a lower high. And then the next thing we have right here is a lower high, a lower low rather, which is called LL. That's your lower low. The next thing we have is your high again. This is going to be called a high. Just take it as your high because it's actually a high, but for the sake of the downtrend move that you are trying to learn, so just call it a high to avoid confusion. Now the next low we have right here is a lower low, because this very low, this low is lower than the last low we have right here. So this low is higher than this one. That means this one becomes a new lower low. You understand that? Now this is your high again. Now they call this a lower high, a lower high. Now this is how to identify trends on your chart. If you do something like this, you say okay, this market is bearish or the market is in a downtrend. And mind you, it was doing something like this. It was breaking structures. As I said earlier, it broke structure here. The next structure that broke, the major structure right here, was around here. So you see that the next structure that broke was around here. So for the sake of clarity, I'm not going to be diving too deep into this to help us to assimilate this very one easier for now before I move further. So that is basically what we have for downtrend. So a quick recap: market structure is simply understanding the highs and the lows. Simply understanding the highs and the lows like we did. That's basically what market structure means. Simply identify the highs, the lows, the highs, the lows, highs, lows. Basically that. It also means understanding the trend, uptrend, downtrend, and range. And also market structure also involves your breakout structure. This is the foundation of many trading strategies, including things like order blocks and other smart money concepts, which I'm going to talk about as time goes on. So if this video helps you understand the market a bit, make sure you like the video, subscribe to the channel, and drop a comment below if market structure has ever confused you before. And stay tuned, because in the next video we are going to start talking about how to align your entries with what you've learned, and also talk about more complex and advanced stuff. This is DivyFX, where we trade smart and not hard. I will see you in the next one. Thank you.